Well, hello. You are here because you are planning to invest into a real estate in Dubai. And I would like to talk to you about taxes when you invest into real estate in Dubai. But please allow me to introduce myself and explain to you why am I able to discuss those things with you and who am I to tell you things. My name is Elina Linderman. I am a graduate of the University of South Florida in Tampa Bay, Florida, as you probably guessed. I am an enrolled agent. What is that? What kind of license is that? This is a little bit of a different license than a CPA. CPA is a wonderful expert that kind of like a general practitioner. My little sister is a CPA, but I still prepare her tax returns because her tax returns are complicated. I am an EA. EA stands for Enrolled Agent. The license is actually issued by the IRS. And if we compare that kind of license to a CPA, I am like a brain surgeon of taxes. That's probably the easiest explanation that I can give you. I live taxes, I breathe taxes, my whole life is taxes. I graduated, as I already told you, University of South Florida in '98, and since then I've done absolutely nothing else. I'm very contagious, I have to warn you. I love taxes so much that, as I mentioned, my little sister has become an accountant, and now my son is also an accountant, and he has joined my firm. So I would say that I'm one of those tax geek people who just really love taxes. And I'm here to talk to you about tomatoes. Potatoes, no, about taxes. So please get comfortable, let's begin. But before we continue, allow me to explain a few other things why I have specifically chosen to work with this company and not any other. Let's talk about Masterpiece Properties. And by the way, I do get requests from multiple other agencies all the time. However, this is what I noticed. Most agents and realtors in the US are not investment professionals. They have no specialization. Today, they sell a house to pensioners. Tomorrow, they sell an apartment to a family. The day after, maybe they sell an investment property. They don't really understand the numbers. They don't really study the market from the investor perspective. And this is a completely different type of study. They simply sell what they receive in the listings, and whoever pays them higher commissions. The guys from Masterpiece are surprisingly different, and that's why I have chosen to work specifically with them. They are highly specialized. They focus on investment property in Dubai for 10 years already. That's a long time. They don't just sell or promise profitability like many others, but they take control of the property, removing all worries and giving a guarantee of 8% interest per annum for 3 years, which is unique in the real estate market. They are highly specialized in the US market and help American investors invest correctly. So let's dive in. But before we continue, allow me to just mention a few more things about myself. I know you're wondering, what is this accent? I was born in Russia. Well, technically I was born in Soviet Union, but as you know, Soviet Union has collapsed, and I am from Russia. I have been in the United States for over 30 years. Even though you hear that wonderful accent of mine, I have to admit a secret. I prefer to speak English, and I think in English. And I consider myself an American. In this video, what we're going to learn is how to invest. Should you invest as a physical individual or as a business? We will also learn how to properly transfer funds. And we will also explain implications of paying by wire or crypto and implications of opening a bank account in Dubai. Allow me to explain to you first why your accountant or why your CPA doesn't know and not able to explain you those concepts. Believe it or not, they do not teach us that at the university. They just don't. They don't even teach us when we take our exams. This is something that we have to learn ourselves over and above of any academics, because this is a unique niche expertise, and majority of CPAs just do not specialize in some kind of narrow market. And that is why I am the brain surgeon, and I am here to explain to you all of those concepts. Let's begin. From the perspective of investment, you have two options. You can invest as a physical individual, or you can invest as a business. If you're going to invest as a business, it adds a small layer of complexity. Do you open a company in the United States, or do you open a company in Dubai? Yes, you would open a company in Dubai, because that removes a lot of complications. Imagine if you open a company in the United States, then you have to register a foreign company in Dubai. Oh my goodness, that adds all kinds of extra complications, and I really do not recommend it. If we're really talking about what's the simplest, the easiest way to invest, then we're talking about just you as a physical individual. Can you use a company if you want to invest? Yes, of course you can, but be prepared that your reporting will go through the roof. Now, how to invest? That initial transfer of funds, how should that be? First of all, I would like to let you know that initial investment that you're making, it is not tax deductible. We later will discuss in other video how to deduct everything from taxes, but since we are talking about your initial investment, just wanted to let you know that part. The money you put in, so let's say 20,000, 30,000, as your initial investment, not deductible. Now, how do you transfer that initial investment? The easiest way, really by wire. My bank charges $45 for international wires, but if you have, I think, $100,000 in that specific bank account, then they waive it. So I get my international wires free of charge. That's Bank of America, by the way. If you have another bank, please find out exactly what they do and how they do it. You have other options. You can transfer money using crypto. There's nothing wrong about it. Crypto is an allowable method of paying somebody. However, this is what you must keep in mind. Let's imagine that you have purchased crypto on day one, and even if it's USDT, you paid, let's say, $100,000 for that crypto. But any cryptocurrency goes up and down in price. And therefore, whenever you transfer your money, let's say your crypto is not 100,000 anymore, 100,001. We, in our tax universe, consider this to be a completed transaction. So in your tax return, American tax return, you are going to report that specific transaction that you have purchased crypto for 100,000, that you have technically sold, because an investment is equivalent of selling of your crypto. Crypto is an asset. So you sold your $100,000 asset for 101,000, and now you're paying taxes. Don't worry, not on the whole amount, just on your earnings. How much did you earn? $1,000. So that specific transaction will go into your tax return, and you pay in taxes on the income portion. You could have the same transaction going the other way. You could lose money on that transaction. So speaking about, as an example, you invested $100,000, you then getting only 99,000 whenever you're ready to transfer. So now you lost $1,000. That money that you lost, that $1,000, is going to be reported on your tax return, and it's going to reduce your tax liability. So whenever you have crypto, there is some implications. And of course, last but not least, you can actually physically fly to Dubai and open yourself a bank account. That is also a permissible transaction. In that case, you will first transfer money from United States bank account to your foreign account. But believe it or not, there's implications about it too. You see, there's this nasty little law that's called FATCA. We will talk about FATCA in greater details in the next video. But for the conversation about foreign accounts, law FATCA specifically states that if United States individual, who is United States individual? We all are. Anybody who has United States citizenship or green card or just spends a long time in the United States becomes United States taxpayer. So FATCA states that if you have foreign accounts overseas, you must report them by filing a special report that's called F-bar. And by the way, please note, F-bar is not filed with the IRS. F-bar is filed with an organization that's called FinCEN. There is another possible reporting with the IRS that becomes part of your tax return, but the thresholds are a little bit higher. I'm talking about filing thresholds. Allow me to explain in greater details what I mean. So the law states that if you have foreign accounts, not United States account, we're talking specifically about foreign accounts. And basically, if you do fly to Dubai and open a bank account there, that becomes your foreign account. So if you have foreign accounts with the value that exceed $10,000 on just any day out of the year, you must report them. So you technically could have money come in, come out the same day, but you still have to report for FATCA purposes. It's not a taxable transaction. You are simply reporting. You are simply giving information to the United States government that you have an overseas account and what the balance is. In the report, you will also have to include the name of the bank, address of your bank, and of course, highest account balance. Depending on how much money you transferred, you might have to file just F-bar to FinCEN, as we discussed, or you might have an additional report that goes to the IRS. And as we said, it's purely informational. You're not going to be taxed on that amount. I hope that you found this video informative, that I was able to assist you understand a little bit better on how investing into foreign real estate will work. We have a series of videos. In the next videos, we will discuss other very important topics. Specifically, if you choose to work with a foreign company, how do you do it? What happens after you purchase your property? What is depreciation? How do you move funds back to the United States? And we'll talk more about FATCA one more time. So we have a lot more things to learn. Stay tuned.